is episode 10. We've been at this for 10 months now, and it's January 2019. Professionals here, we are just giving out good ideas. And Happy New Year again, everybody.
Yeah, Happy New Year, Lane. I was wondering if you had did any reflection on the prior year or started planning your vision for 2019 yet?
I did. We're gonna do a goals webinar on Saturday morning, probably before this goes out. But if you guys want access to that, it's kind of a guided thing you guys can do on demand. Shoot me an email, lane@simplepassivecashflow.com, and I can send you the recording, the YouTube channel recording for that.
Oh, sounds fun. Is it mostly finance based or is it more broad based?
Mostly, like, it's kind of like a guided thing where you kind of think about 2018, what you did well, what worked well, and then you kind of go through all, like, financial, relationships, physical, spiritual type goals.
Okay, cool.
Break it down. Because you just don't want to be the rich guy, right?
Yeah, the rich guy that has no fulfillment, right? That's true. That sounds good, because for me, I started my 2019 vision board and it has like all finance stuff, so it's really imbalanced. So
I mean, that's like mine's too, I think.
Oh, that's good though. I mean, if this session's gonna be more holistic, I think it's a good opportunity for people to who have that imbalance to kind of balance it out, right, and get more that holistic approach.
Right. Because as we're kind of going to go over today, a lot of changing market conditions, right?
Yeah, crazy on the macro level. So yeah, with that said, I'll just be brief on the Hawaii stuff. So being early December, the December stats from the Honolulu Board of Realtors it will be coming out in 3 days on the 6th. So just gonna touch base on the November information real quick. And again, this is all median prices. And so starting off with 288 closed sales for single family homes in November 2018, which is a reduction of 13% from same time prior year, and also closed sales on the median condo of 429, which also shows a reduction of 14%. We have days on market also jumping up compared to prior year, so very indicative of this shift that we've talked about over the last, I don't know how many months. Not indicative to the shift though is the prices. Yeah, we see it for both single family and condo, the 3 and 4% increase in prices. So, I mean, it's a great time for buyers, because on the selling side, you're seeing a lot less competition in terms of multiple offer situations. We're seeing a lot of I think we talked about this before, like the VA and the SBA loans offers winning out. So and again, this is great for buyers, but on the seller side, it's they're not as strong offers, right? Because of as we discussed, the tough underwriting and sometimes the price, the prices, the offers are higher, but the underwriting is tough, and even the appraisals are more conservative. They tend to be. So, I mean, in my mind, I think it is good for the buyers, but it's still definitely strong for the sellers. I think the sellers have been spoiled for the last so many years. Now it's just loosening up just a little bit in favor for the buyers, but still definitely a seller's market. So if you're thinking of selling in the next few years, I think now is a good time. The interest rates, I think you're going to talk about later too, is still low. In December it went down, even though the Feds raised the Fed rate up to 2.5. So that gives the buyers still a lot of buying power, especially in a market that we have such expensive prices in Hawaii. But so right. Segue to you, Lane.
Yeah, I mean, this is the kind of the elephant in the room, right? Like, people got killed this past this past month. I mean, I think a lot of people. I mean, I think a lot. I think you probably got a lot of friends too, right? They think they investing in the stock market, but it's all luck, right? And
Yeah.
kind of see who's really left standing by the end of the when the tide goes out. So if you
Yeah.
guys have been kind of living under a rock, or hopefully you weren't kind of paying too much attention to this, but December was just a killer month for everybody, and in terms of like pretty much gave back all the gains that they got for 2018,
Yep.
and
And
so
then some, I think. And
yeah.
then some. Yep.
So just kind of scrolling down this great Washington Post article. I like when they have these animations, as we'll see here. Um, yeah, negative 11% from the start of the month. Either they're saying that, Trump has started to play his like tax war games, which we've been talking about in past episodes. Whether it's true or not, who knows? But the effect is people are losing a lot of money in their 401k, mutual fund, stocks. The Federal Reserve announced that they raised rates a quarter point again, the fourth time this year, and they've been raising these rates for a quarter point for the last few years now, right?
Yep.
If you guys don't remember, 2008, 2009 happened, a big recession. The rates got brought down to zero, and that's what we kind of talk. We call it dry powder. When the Fed raises rates, that gives them the ability to drop the rates, which hopefully is dry powder or whatever you want to call it. Some brakes to stop the backslide in the economy.
Yeah. Just using monetary policy to prevent a recession.
Right, right. There was no Santa Claus rally this year, it looked like.
The opposite, I think. Yeah.
Yeah. One of these days it actually fell like 1,000 points, right? And it kind of rebounded a little bit. But yeah, I mean, here you're looking what happened for the whole year. And yeah, overall it was a negative 8% loss. And you guys can always, if you guys are so interested in reading this, pause the video as you like. Looking back on a 2-year scale, still up 10% on a 2-year scale, but that's only 5% per year. Taking it back a longer perspective since the recession, I mean, it's rose 268%. Pretty nice
Yeah,
gain.
not too shabby.
Yeah. But the nice thing, with investing in real estate, whether it's your primary house or your own rentals, is that you're playing with leverage, right? Whereas
Yeah.
stocks, unless you're kind of gambling with option,
on margin or something.
right? And you don't have all the tax benefits.
Not only that too, but you talk about the fees, right? That you potentially could be paying to your advisor or to your fund manager. That's not going to be exactly what. Even though the market did the 268, doesn't mean the investors are, like you and I got that, right? And our 401ks and things.
Right, right.
That's for another story, though.
Another story. So we'll kind of swap back here we'll kind of bring it back closer to Hawaii, but we'll stay on this macro side of the house here a little bit. 2018 December 11th was when the spread between the 2-year and the 5-year Treasury note went negative, or they call this when the two yield curves inverted. Some people follow the 2 and the 10. I don't know. This is something that's kind of new to me. And then, do you kind of follow this inversion of the treasuries 2 and 5s?
No, when it does do that, what does that that sounds really odd. So
Yeah, so this is kind of like a lot of people geek out on this, and some guys will look at the 2 and the 10-year treasury note, but
okay.
as you can see in like the bottom right hand of the screen, the two charts are inverting at that point. They're kind of coming back together.
So something's
And
in imbalance then,
right, that's imbalance in the force essentially. So
right?
that signifies the recession, right?
Got it.
And a lot of people kind of really keep their eyes out for this.
Hmm. So this is the kind of like a leading indicator kind of thing.
Right, right. Of course, another big one. I was talking to an investor today, and he really looks at the unemployment because right now unemployment is like at low twos, 3%. In the recession, it was like at 10, low teens, I think. So that's something really, really to watch.
To going to say that we're kind of like at the peak kind of thing.
Yeah, I mean, it's the unemployment is not going to go below 2%. That's just
Mm.
not going to happen. I don't know if you heard these articles. Um, they call it ghosting. You hear that term? I mean, it's usually synonymous with like dating, online dating, like Tinder, where like when you meet somebody on the app and then you just ghost them because you just are kind of ashamed to, having that awkward moment where you don't say, "Hey, let's not hang out anymore." But like now, employers or job candidates going for job interviews, they just have so much opportunity out there that they're just not even like they're just ghosting their employers at the job interviews.
Wow.
And like I'm sure you can kind of see it at work too, right? Like people are ghosting their employer at work. Like they just leave for lunch, like and don't come back till the next day.
Oh,
Like it's
just
kind of
just
lax, right?
taking advantage of the fact that you're a commodity right now and you're almost untouchable kind of thing.
Yeah, yeah. I mean, there's if you can't find the job, something's wrong with you right now.
Yeah.
I mean, it's kind of says where you are in the economy.
Yeah. Hmm.
Some other cool stats here. More on the home builder side. I follow this ITR economics blog. You gotta pay to be a part of that, but they have some really neat stuff on there. When I follow, they really follow that 10 and the 2T, the treasury. And so I closed the property. I told you this in um, December of the 19th, I think, or the week after, right before Christmas.
19th
So
is the day the Feds raise the rate.
yeah, they raised the rates, right? Which you think is a bad thing, but everybody else, all the other gamblers, which you call them, or the economy says, nah, the Feds is going to have to lower the rates in the sort of semi term future. So like 2 to 5 year time frame, something like that. So
Oh,
the 10-year treasury actually went down, which is
hmm.
a really weird phenomenon, right? Like
Yeah.
it's like they're raising rates, but everybody knows that it's gonna come back down.
Yeah,
So
because at that same time, the 30-year went to like 4.55, which is like the lowest it's been since the summer. So it's like totally opposite, or not counterintuitive, but I mean they don't go hand in hand. But yeah, it's kind of odd, right?
yeah, yeah. So we got lucky and we locked in like a 4%
Oh
30
wow.
amortization, and then we stacked another note on top of it. But yeah, it's more of a commercial loan, but it's just sort of indicative. Like the 10 year is really what kind of follows what the interest rates are for you home buyers out there.
Hmm.
So weird phenomenon, but hey, that's you get lucky sometimes.
Yeah, yeah.
But and it's not about us; it's about the listeners here, right? Like, okay, so I'm gonna do it. I'm gonna buy my house or sell my house. What's happening with prices, and then the interest rates, because those sort of go hand in hand.
Oh, got it. Hmm. Okay.
So you talk about the median days in the market
Oh,
here.
okay. So what I was getting to for this was going back to the whole back to Hawaii now, Oahu, and discussing about being having some hope for the buyers. So if you can go back one slide, um, so you know how we're saying that the days on market is increasing, sales are number of sales volume is decreasing, and so it's giving the buyer side hope, and if you look at a graph like this showing the 2 year median days on market, we see that the big jump going to almost a month, for median days on market. But this can kind of be deceiving, because if you go to the next slide, which breaks down the days on market by price range, you can see that actually everything is relatively stable. It's actually the lower 350K and below that is jumping up in terms of days on market. So that stat is kind of deceiving. And then, like they say, right, real estate is local. So that's why it sounds like there's hope for the buyers, but it's still, I think, very strong for the sellers. And the next slide, we talked about earlier in the conversation how in December in the Feds raised their rate, but the 30-year loans went to 4.55, which is the lowest since the summer. And then the next slide I wanted to talk about.
Well, let's kind of break that down a little bit in case people don't miss the bus on that. So the Fed's fund rate is about 2.5 these days. And then there's a little bit of margin there for the banks to make their profit.
Right.
So that's why you're seeing the delta between 4.55 and 2.5. So there's a couple of points spread in there. If you were to, if we were doing this maybe about 7 years ago, right, when the bottom in 2010-ish, I think that was kind of on the bottom. The Fed's rate was 0. So you could pick up a 30-year mortgage for, sure, what was it, like 3.5 or something? 3.
Yeah.
Yeah.
Pretty awesome. But 4.55 ain't too shabby, because it's in our parents' days it was in the teens, so inflation was crazy, so they had to bump up the rates high. The Fed rates were high, and so were the long-term rates.
Yeah, because what was the most that you might be dating yourself, but like how much? What was the highest you ever saw it?
I think it was like in the 7s.
Yeah.
So no, it wasn't anything crazy. Like I mean, this is like the 70s, 80s and before I had a job. So when it was in the teens. So I haven't been able to experience that, fortunately, that cycle.
Yeah. I think like 7%. The difference of two. It might be a difference of 30% in the interest rate, but it's only 2% difference. Like it shouldn't really matter.
Yeah.
I know people play around with their monthly payment calculators a lot, and it does play around, but like in the grand scheme of things, it doesn't really matter if you're an investor.
Yeah, on the investor side, the challenging part is if you're in Hawaii trying to buy. A lot of times you're trying to buy what you want to own and what you want to live in, and that's you're buying at your highest price point. So any slight shift in interest rates really can reduce your buying power because of the high cost of housing down on Oahu.
Yeah.
So that's when it causes a challenge on the buyer side. Yeah.
All right, average sales price.
Yeah, so this is what I kind of wanted to just show in terms of on the seller side. If we look at this 2-year graph, it's pretty stable in terms of prices. So we haven't seen a big downturn on the sales price. If you go even to the next slide, it talks about percent of original list price received, and we see it dipping down a little bit at the end, but you're still in the 90. At the bottom is 97% of your original list price. So if you're like a technical analyst, like the stock technical analyzers, you're still in this band, and you're still, in my mind, it's still pretty good for the sellers. So
yeah, and this is meant to like bounce, invert back and forth. It seems like each sine wave period is what, like 3 months.
Yeah. Two,
Eh,
2 months about, yeah. Or
Yeah.
3 months. Yeah, yeah, yeah.
And I think, I don't know what your opinion is, but if you're like, okay, this is where we are now, and it's um the list price is the asking price, the list price is the same or higher this, and you're trying to time it, I think you need to go get a life, because that's just not how this stuff works.
Yeah, I mean, it probably is like, when you're listing a house and you're setting your comp, you're based on the most recent sale or the most recent in escrow, so you're gonna price it at that price point, right? So if you price it there and they come to find out they close and it's a little bit lower, then that's gonna create it to go down the next time. So that when the next lister comes on, he's gonna list it at a lower price. So it's gonna keep on going up and down and up and down.
You know how I
That's just
think, if
an
you were
adult.
to geek out on this, the way I would look at, like, if you look at June 7th, 17, July 17,
Okay.
it looks like, definitely you're pushing, there was high demand there. And
Mhm.
I think it's similar when you're looking at technical analysis and stocks
Mhm.
to, like, when you see a bump in price and there's a lot of volume behind it.
Mhm.
Like, if you look at a lot of the stock market losses in December, it was going down in price, but the second thing you gotta look at is how much volume's behind it, right?
You're right. You're
Because
right.
if it's a sell-off with low volume, then it's kind of like it's not. It's just,
That's meaningful.
yeah,
Yeah, that's true.
that's the way I kind of look at this thing.
Yeah. So yeah, point to those slides were just to say that, yeah, if you're a seller that's thinking about selling in the next 1 to 2 years, now is a good time. I mean, we haven't seen a downshift in the prices just yet. So not to say that they will, but it's a good time if you're a seller as well as if you're a buyer.
And I've got some Christmas goodies for you guys. Whatever you guys, you call it the futobuku or all the leftovers. But simplepassivecashflow.com/free, and you guys can get a bunch of free spreadsheets, tips, and networking opportunities. And I think that's the end of this episode.
Sounds good.
Suggestions, questions, and topics. And we're also at this time we're Dean's helping me sell my condo, so we actually have like a mini series we're recording while we're doing that. So if you guys can't find that, let us know and we'll send that out to you guys, and we kind of walk through the whole transaction for you guys. But there's my email too, and we'll see you guys next time.
See ya.